Oh, that D means it's time to go. I got a big one here today. Switch my camera around. Yeah, I got let my hair out because I got a crazy, totally justifiable conspiracy theory for what was able to actually keep Bitcoin propped up today. You can just look at the volume. Highly, highly irregular. I had a low effort post earlier today on TradingView, but I'm going to explain it here in just a bit. We've also got to talk about the elephant in the room, and that is the entire stock market just absolutely crashing. Well, it's come down to a 50% retracement level right there, the kind of thing that I look for. Also got my VIX number that I wanted, so let's listen to a little bit of music, let people filter in, and we'll get to it. Be right back. All right. What's up, Jeremiah? Test looks good. Yeah, good afternoon. Good afternoon. All right. Well, I got a crazy one for you guys today. I do, because what a crazy day it is. I did pretty good in futures myself. Hope you guys have done pretty well. I didn't have the full ambition to play it all the way down to this level. Jeez. I did not think that we would hit the full 50% retracement. By the way, this is the full 50% going back to the trend that started in October of 2023. I've switched up my setup here a little bit because I've got like a second widescreen, because you know how traders are. We got to get more screens. We can never have enough. So I'm trying this out. So I may not be able to look you in the eye as much. Actually, this is in my face a little bit. So, oh well, whatever. All right. So, yeah. Wow. But that's not the story. I'm kind of burying the lead. I really want to talk about Bitcoin today because something I noticed going into this, I'm going to be honest, because it's a little vexing to me because I have been betting on the MicroStrategy Ponzi blowing up. But looks like somebody else has joined in the Ponzi, except someone that's actually not a retard. And that person, and believe it or not, that we're going to have to talk about is right here. That is, believe it or not, GME, which managed to pull out a plus 11% on a massively, like, I don't know what this ranks in terms of down days on the stock market and equities, but who'd have thunk that? But that kind of tips the hand for what went on that I noticed all through today. And I was talking in a Bitcoin chat earlier, and I didn't realize who it was. At first, I thought it was Marathon, because they've also started wanting to put Bitcoin on their balance sheet as a treasury asset, as they're calling it. But they didn't do the same thing that Ryan Cohen did. And Ryan Cohen, by the way, he's respected as a trader, okay? And that's why I started kind of noticing something happening yesterday into today. Stock market was down about 4% at one point yesterday, but Bitcoin was holding up. And a lot of Bitcoin maxis are like, yay, we're not a risk asset, safe haven. I don't know about all that. It's still a risk asset. But why I don't think that's actually the case is just looking at the volume. So let me show you what I noticed. So today, you got a lot of volume, above average by far, almost more than twice as much. But that's because you had such a big day. If you look at the stocks are down bigly, okay? And then we look at Bitcoin. Let's put it in Ichimoku terms so we can kind of see. So that's the daily on that, way down. But then you look at Bitcoin. Now, of course, zoom out, bro, and you see it's still in a bearish trend. But it's holding up. And that's going to be the meme that you're going to see all weekend. Oh, look, Bitcoin held up. But this was orchestrated. And I'll show you why. So I woke up early this morning, and I noticed that I woke up before this China announcement. So right here at about 6 a.m., this was when China came out and said that they were going to announce their tariffs, 34% tariffs on U.S. goods. So they're going to fight us. They're going to fight Trump on his tariffs. And they're probably going to be the only country to do it, honestly. The rest of them are going to cave. But that was the big news. And up to that point, though, normally you would not see any volume in the after hours. Most of the volume comes in to Bitcoin in the U.S. market hours with the ETF and just, Americans trading. Now that it's, become a TradFi, instrument, that's when you normally see most of the trading. All right, so there's where you're going to see most of the trading during the U.S. trading day, and that was Thursday. That was yesterday, okay? Now, if you go back and you look at other such 4 p.m. Eastern time, I said the 16th. We're gonna skip yesterday at 4 p.m. because that was Trump. He crashed the market essentially. And so 4 p.m. here on Tuesday, that's about the volume that you got down there. And we could probably do I did a moving average of the volume too. I posted that on Twitter earlier to show how things really kind of exploded today. And then there's your volume for Monday, okay? So, very, very small. Let's just put a kind of thing there for after hours volume on, it never gets really above 80,000. This is the Bitcoin index. Not sure. This is going to be an aggregate of lots of stuff. But then we go into this on after 4 p.m. here. And there's your volume for the after hours here. Way, way above what is normal. And basically in the low liquidity of the after hours, they were pumping this up, trying to keep it positive, and they succeeded on the day so that they can advertise it and they can keep it up there too. And the reason, and I can respect this as a trader, I don't respect Saylor because he just buys tops. He's if you look at the Saylor tracker, you can see that he's bought at the worst times so far. Every time he's buying the top, he wins. He wins because number go up technology is very good, but he's a horrible trader. Ryan Cohen is a good trader, and he knows where we are. Again, everything 50%, holding at 79, which was the 50% retracement going from the all-time high back to that point, that swing low in August. He's hit it twice, and it's just holding. There is a ton of liquidations under this point. And if I did the research about back in February 27th, a friend of mine made some point about, stock market goes down. Well, eventually Bitcoin will buck that trend. Maybe, but historically, 75% of the weeks are correlated positively with Bitcoin. And in every single market correction, has gone down 2x. And so what you should see Bitcoin trading at today is somewhere around 71 to 69K. You should see it back in the range of the pre-Trump rise here. And so this support, any trader looking at it will tell you is absolutely critical because there's a lot of stops, a lot of liquidations sitting there around 75, 76. If it had been allowed to enter into that territory, it would have been lights out. Absolute bear market. But they won. And that comes from I'll bring us some tweets here, whatever. Back in what is it? Back in February, meeting of the minds got together and that's Saylor and Cohen. And then let's see, Cohen, GME, convertible Bitcoin. So just this week, they got their approval to spend $1.5 billion in convertible notes. In addition to all the cash they have something like $4.5 billion in cash as well from all the stuff they did back in 2021. By the way, that's all the money from all the apes basically ended up being in the hands of other rich people rather than them. And also this week, actually just yesterday, bought $11 million worth of his own stock. And so he succeeded in everything he decided to do today. Now again, zoom out, bro. What did we really do to GME? Well, we made a good print on the day, up 11%. What did we accomplish with MicroStrategy? Well, we were keeping it there in this little range that it's in, and just like here. But it looks good, doesn't it? It looks good versus stocks, and that's going to be the meme that you're going to see this weekend. You're going to see a lot of memes about how great it is versus the stock market, and objectively so. Objectively it is. Objectively it has actually held its ground versus stocks, and that's going to be the advertisement value of this move, this motion. I don't know if I want to keep this camera like this, actually. I don't know. I'm not sure I like it. But watch that. So, but here's overall though, I still put the probability at 50-50 that this is a mid-bull cycle correction, which is what the Bitcoin bulls want it to be, versus inside the Bitcoin bear trend. Now, it's all going to be predicated on the stock market still. And the question, there's a lot of unknowns. There's a lot of known unknowns going into this. Like how much money, how much cash do they have to play this game if they need to do it next week? I think this could actually play out pretty well for them. I think this could actually be bullish. And that's what they're betting on. They are betting that the correlation of equities and Bitcoin are going to continue. They held the ground here. They kept it from breaking into liquidation territory here with a strategic deployment. Again, Saylor would have never done this. He would have done as MicroStrategy always does. As soon as they get cash, which they did, I think, earlier this week, they bought about $1.9 billion. And that was from shares, because the number of shares outstanding in MicroStrategy went from 260 million to 266 million shares, which is, multiply that by about 300, and that is, about $1.9 billion. So they created more shares in MicroStrategy, did the infinite money glitch to buy more Bitcoin. And that's how they did it. And so now you have GME doing it, but they purchased Bitcoin, I think, at an average price of 86, whereas all the Bitcoin that was purchased over the last it's all going to be down here in the 83 range, again at support. And so as a trader, I can see, okay, somebody came in and did this smart. And then you can also look at the volume just in today. I mean, this is the volume for today versus days in the past. I mean, you can kind of see here. We can do here. Let's do this volume, and then we'll add. Let's add. Oh, there we go. Let's just add an EMA to that. And let's make this, since we're doing a 5-minute, let's do a 30-minute, and then I'm going to do that with this. So 50. Okay. Move you down. So yeah, huge volume coming in. Just really, really irregular just here in the last part of the week, trying to hold this support versus the rest of the market. And I mean, it's the liquidity. It worked. This worked. And so the question is it going to work in the future? Now, that's, like I said, that's all going to be predicated on the stock market. So what did the stock market do? Because here's the thing: if they're going to succeed, if they do what everyone thinks is going to happen, which is the stock market is going to bounce. Because then you just kind of sit back and you let the correlation of Bitcoin and equities work out to the upside, as they typically have all the time. And so you did what you need to do here. Keep it from trigger those liquidations. Keep the fear away. Put that advertisement up. Get people, really to buy Bitcoin. Trust me, Bitcoin Twitter is going to do the job for them this weekend. And then you just let the correlation play out on the good sides. This is the good manipulation. This is the good manipulation that people like. And so, but here's the question: is that going to work? Now, if you ask some people that think that Orange Man has destroyed the American economy, then they're hoping for that they'll be correct. And they don't really care about their portfolios right now. They just care more about being correct, about, the tariffs being bad. Even though tariffs have been talked about for over 30 years from both sides of the political aisle, now it's bad. We'll see. I'm of the Chad will see variety. I'm not the tariff virgin warrior. But what is this going to be? Is this going to be all we see, and we see a V recovery off of a minus 17% correction? When was the last time we saw a 17% correction? Well, 2021 to 2022, that was somewhere right about here. This February of 2022, that was a 14%. That was getting kind of nasty, and there's a lot of reasons for it to be bullish up here. Then we saw a dip to 20, a dip to 24, and then a dip to 27. And so we're not in the bear market condition yet. Close. I mean, well, I don't consider it a bear market. A lot of people are going to say any minus 15% is a bear market, but no, not quite yet. So this is work. This strategy is going to work if we don't enter a recession. If the stock market does not enter a recession, because then I don't think you have enough cash to keep doing this again. Today was the day to do it. Today was the day to hold it up and make it look good versus equities. Get some people to look at it and think about it as a potential safe haven vehicle. And that's the gambit. That's the advertisement. This is the big billboard that they're putting up today. It's this right here, and it's this right here. Bitcoin today which they're still trying to keep it green on the day. Still trying to keep it green on the day. But this is the big advertisement that they're going to try to run with this weekend on Bitcoin Twitter. Guaranteed. This is going to be the thing. They're not wrong. It did. But there's a lot of volume that came in and made it happen. Okay. And it's real. Don't get me wrong. Like earlier this week, I was arguing with people about paper Bitcoin being sold. So if Bitcoin doesn't go up, then it's manipulated. And that's bad. But if Bitcoin gets held up, that's good. It's both manipulation. That's the market. It's a game. It's a game we're all playing. So we'll see. There's nothing new. There's nothing new about it. So, but I was looking for a VIX to hit 39.22. Got it today. But now we're going to close well above it. And so we do have to look at okay, what's the next level? What's the next level we're going to get to? And again, I'm looking at VIX for timing the market because we hit a price level on the market, but the timing tends to always come based on the volatility index. Like, where's the maximum fear? So the next point of fear in the market where people really start to get afraid, we're almost close to it. We'll probably hit it next week, is 48. And then we have to, we're getting up in the territory where, this is where your big pullbacks happen, is in the high 40s of a VIX print. VIX is the volatility index. It's the implied volatility of SPY options. And that's the range where you start to actually get a market bottom and you can start to play it. It's hit it only a couple times in the last couple of decades, but we're getting up in there. Today wasn't the worst, but we're getting there. So that makes me think that next week we're going to get a little bit slightly lower dip, and then we're going to play around this 50% level on the S&P 500 to see if we hold this 50%, or what may be even more likely is we hit the 480 SPY. And those are going to be the levels I'm going to be looking for. And so where and when it hits these levels is going to be really, really critical. But we'll have to wait and see. But a very interesting week. How's everything else doing? Let's look at the sector rotation. By the way, if you got questions, let me catch up on chat, actually. Because, if you guys got questions or you got symbols to look at, make sure that you post them in the chat. Because I had a lot to get out today. Let's see. This microphone is right in my face. I'm going to switch this up for next week. So, all right, let's see. Historically, S&P's biggest drop, 57% over 511 days, and the recovery was about 1491. Yeah, I am not even old enough to have traded the 2008 crash. That's actually before I was alive. But I didn't really care about stocks back then. In fact, the entire global financial crisis was what got me interested, as well as a lot of people, I suppose, in the market and how the world of finance actually impacted the entire world. Because I was working in IT at the time, and just doing computers, working on systems. And they instituted a hiring freeze and salary freeze. And I was just like, why? We're doing great. But everyone was scared. And so, yeah. A lot of talking about housing today, too. This is an interesting time. Trust me. Just let me talk about this real quick. But, 57%. That right there. And this is a monthly chart, by the way. So that was over the course of not just a month or a quarter, as we're seeing here, but that was from October of 2007 all the way to March of 2009, almost a year and a half. Yeah, a year and a half. And so, and then you had a period of, now I'm not trying to scare people here. I'm usually of the things will probably be fine persuasion, and I mean that exactly, probably. In other words, it's most probable that the stock market go up. Stocks go up, right? It's most probable that Bitcoin goes up. But you're gonna have some things that you don't expect. And so, basically around January of 2008, following October, probably let's just look at it here. Oh, let's go back. So just imagine that they were looking at what they were looking at here. Okay, stock market go up, stock market go up. Oh, we had a nice juicy pullback of 20% from October to January. Then what do we get? Oh, we got a relief rally. Okay, that's fine. We know that we just buy and we hold and we're fine. And that's what's going to probably take over people's mood if we do get a type of, bottom, or even, got a little double bottom here. Like, look at that. All the chart traders, double bottom. We're good. We're fine. We're doing great. This is fine. My retirement portfolio is great. Everything's okay. It wasn't until a little bit more in 2008 that the real problems started setting in. And if you watch that movie, The Big Short, you'll recall that Michael Burry and all the other people that were ahead of the curve, they were in their credit default swaps. And throughout, they had to wait a long time on this short to play out. This is kind of a little bit of a self-check on myself because, as I said earlier, like I'm in a put-based short position on MicroStrategy. I'm betting on this Ponzi collapsing. And a day like today really tests that. It does. Being in a short position means you got to wait a long time. And you got to make sure that you're shorting something that is fundamentally broken. And it's basically a game of chicken right now. If they're going to have enough cash to hold this thing up. Now they got an ally. Now they got actually a good trader. I have to take that as a data point. It's like, now you're going up against somebody that knows what the hell they're doing. And when they're trying to defend an asset, when they're trying to defend a holding of theirs, that's what I'm continuing. I have to actually do a little bit of an ego check here on this and wonder, okay, has the market actually changed? But that's what they went through when they were sitting in their credit default swaps, waiting to see if what they thought was going to happen would happen. And then finally, later on in 2008, they finally had the prints they wanted, as the market finally did just give it up, and it went to levels that no one thought. I mean, these are weekly bars, by the way. These are just. I didn't care, so I can't really tell you what this felt like because I wasn't trading stocks. I had a few stocks, but this is what got me interested. But I was not feeling the pain that a lot of people of the older generation probably were going through this. But I mean, just this is the kind of thing that a real issue is. I mean, these are weeks, okay? Again, I'm not saying this is going to happen, but this is the level of this will happen again at some point in our lives. If we're fortunate to live long enough, we will see something like this again. People have been thinking it's going to happen every year, by the way, since this. I mean, you don't hear it now, but when I got into trading, when I got into actively trading in about 2013, I quit my job and started doing it full time. Every day in the news was the next 2008's coming. It's worse than 2008. 2008 on the horizon. This could be 2008. That kind of stopped around. It really only stopped in COVID because then we had something else to worry about. But it was deeply emotionally affecting for people, and it's been forgotten. And so, yeah. But that is a real bear market. That is a real recession, and we haven't really seen that in a generation by now. And so it's not really in people's emotional memory. And so that is the worst case scenario. But like I said, before that happens, the market's going to play games. It's going to make people think that that's not going to happen. And that's the dangerous situation. Like the really dangerous situation is not this. This is not the dangerous situation, because I read something today that yesterday, I don't know what the figure is going to be today, but $4.7 billion of retail inflows went into the market. I even threw some on VU today because we got to that VIX level. I was waiting for my VIX level. I was patient, told people in Discord, I'm waiting. And so today I did. But we'll see. I mean, but this is not bad. What's bad is you get something like this. And like I said, you get maybe even like a little double retest, like a little double bottom. And then that is panic. So the market plays games, and that's when you really see some crazy stuff going on. But fear not if you're a trader, because guess what? You can go the other way. And today with futures, I won't toot my horn too much, but with futures, with volume profile level, my friends and I that trade futures, we're confident that we can just make money on futures, especially when there's a bunch of activity. Today's futures trade was pretty darn simple. It was the same thing that I look at no matter what I'm doing. Wait, this, hold on, am I in the thing? Yeah, we're 16. Okay. It was earlier. There it is. Okay. So this was, what was it? MES. Well, I'll just do a volume profile. I'll find it. The overnight volume profile basically brought it up to, see, why did I think it was 11? 52.72. I haven't made my log for today yet. But, no, hold on. No. It was 11. Oh, that's right. Okay, hold on. There. I thought it was 53.11. I remember that number. And so, yeah. Again, it was a trade that had to be taken. 50% of the leg down overnight matching up with the volume profile. And, oh, that's right. We had a spike at the news drop today, which is really not anything, and then grabbed it at 11, held it, and I didn't make all this. I basically closed it out on the upswing up here because, like, okay, that's going to be the dip. And, yeah, I kind of cut myself short, as I always do. But there's going to be a lot of opportunity because volatility is expanding. That's going to be a lot of range to trade. There's going to be a lot of opportunity, and you have to be willing to go the other way. Like, I remember people used to buy SPY puts all the time just to try to bet on the market going down back in 2021 when it just kept on ripping, and just constantly we're just feeding the market money. Now's not the time to be buying SPY puts because you're basically selling the bottom. But watch in the next couple of days. You're going to get a relief rally, and then you're going to see what really happens. I mean, this was basically what the world looked like. This is the realm of trading just a few days ago, where it came back up and it almost missed by a few points, this 50% right here. And so now what we got to look at is we got to look at volume profile levels and 50% to the upside to see, okay, if we are thinking that this is going to be a bearish situation, where do we look to position ourselves bearish? And like, look at this small little world that we were in just a few days ago to start the week, and now this is what we're looking at. And so there's a lot of juicy movement to be made here. Were you guys trying to trade in this area right here? It was gross, wasn't it? It was just, there's nothing to do. Now things are getting interesting. Let's see. Do you think that the panic of people could change that? Well, I mean, people are going to panic no matter what. I mean, people are today panicking to sell it off this much. I mean, this is panic. It's just that there's still a lot of this will probably be fine, which is my normal opinion. But there's still a lot of people that are looking at this as an opportunity, which it is, or it isn't. That's the beauty of it. That's why I love this. You never know. But it's all about controlling your risk. And that's why I definitely like options, because your risk is fixed, and trading futures on day trading, because I mean futures can be as big or as small as you want them to be. And while your whole portfolio is going down, while your 401k is going down, if you're trading futures, by the way, don't just jump in and think that you're going to immediately be printing money. It takes a plan. It takes experience. But now it's going to be a really juicy time to be trading. But just stay really small. Stay small. Stay small. Learn. If you're fresh out, I know I had a new guy that was talking about it, talking to me, wanting to get into trading. Be way smaller than you think you should be. Now is going to be a really good time to learn. But if you're just starting out, now's not necessarily the time to think that you're gonna hit it big. Now's the time to learn. If you have proficiency, now is the time to print money. But this is going to be a good learning experience for you. Very good opportunity. All right, so TLT, short versus puts versus inverse ETF. So good question. They all have their strengths and weaknesses. In a time like this, because of a lot of different factors, I prefer puts. Depends. So the one thing I don't like is inverse ETFs, and here's why. Inverse ETFs have a asymmetric risk associated with them. Let's see. What are the options for that? What are the SPY inverse ETFs? So there is a single 1X inverse ETF, which is SH, and I actually use this in my 401k. And so this is what will give you like a 1-to-1 contrary, it basically is going to hedge you. If you have, 50% SPY, 50% SH, you should be flat. Okay. I like that. I like that for hedging. A lot of people though, they got into these inverse tech ETFs, or rather these leveraged tech ETFs, especially at the beginning of this year. And by the way, for people that, have asked me, I'm still not interested in tech this year. That may change later in the year, but no, I'm not interested in tech. And people have come to me all Q1 asking me about buying NVIDIA, buying Palantir, and my answer has just always been the same. No, you want to see at least a 50% to 60% haircut on your favorite tech stocks before you buy them. And people are just getting killed. All the memes about people's portfolio being down massively are people that followed AI into this year. And it was, no. My biggest play and biggest win so far this year has been the shitty little company Dollar General. Dollar freaking General. Okay, but let me get back to my point. So SH is the 1X, all right? And so, yeah, down to today it's up because it's 1X. And then SPDN is the, wait, that's the same thing. Where's the multiples? They're going to have, no, okay. What about the leveraged inverses? Give me just a list as a table. So I don't like them because of the risk asymmetry. And here's why. So as you should know as a trader investor, that the more you go down, the harder it is to make it back up. Okay. And it's a good question. Let me see if I can do this quickly. Okay, so SDS is the 2X. And that is up today from close to close 12% because market's down 6%. Works. And then the 3X is SPXU. And that is going to be up, well, it's going to be the same. It's going to be 3X, so it's up 18%. Okay, here, let me just do this. So here are your leveraged ETFs. All right, put them on the screen here. So if you are a hedge fund manager and you have exposure and you only have like, if you're in a 401k, let's say that you have 75% of your money deployed in SPY. If you were to do the other 25% cash in a 3X leveraged ETF, you're hedged. That's how they're supposed to be used. But a lot of people use these improperly. They get into these leveraged ETFs, but the problem is it works as a double-edged sword, except even sharper on the downside. In other words, when these things go against you, while you may have a up day of 18%, you're going to have a down day of 18%. And that kind of sort of, it compounds basically. So it's going to take you more to get back from 18% down than up. So in other words, if let's say you go down 5%, okay, now you're at 95%. All right. Market goes up 5%. What is 5% of 95? And so that is going to be 4.75%. So now, even though you had the same day, you're only back up to 99.75. And of course, that's going to compound over the days and days and days. And so when you have a leveraged ETF and it's going against you, you're losing a lot of money quicker than you're going to get it back. And so you have to be really, really right. Timing is going to be really important, and most people can't knock the timing. So I tend to stay away from the leveraged ETFs unless you're hedging a portfolio, doing it the right way, using it for that purpose. Let's see. Dollar General, the hood is always buying. You know, here's the thing about that. I don't do tips. I don't do recommendations, but I posted about this when I did it. It came to the volume profile level from 2014 to 2017. They had this massive run when they were overexpanding, which is what killed them, stores everywhere. And so you have a top of 260 and was able to pick it up around 71. And now it's trending bullish on the daily, and you got a lot of freaking upside for a long-term position. I mean, it's just, and it's going against the market because it's a consumer staple, and this is a sector rotation. So I feel pretty good about this one. I really do, and I have. I mean, this is, the other ones that I've talked about. Hershey's chocolate's not doing quite as well as candy in general, and then of course Kroger. Again, big down move today, but this thing just keeps on going and going and going. Waste Management, another consumer staple, holding its ground. Costco, against it, doing pretty well. Thank you, my friend. That is excellent. That was what I was going to do, but not take the time on the live stream. Let's see. Yeah, so it takes this to get it back. This is all right. You know it. Good. I'm feeling confident about you, man, that you know this. This is very important. So this is what gets people with any kind of trading when you take big losses and you have to make up so much more to get back. If you lose 5%, you need to make 5.3% back. You lose 50%, now you got to double your money. You take a full 70%, now you need a 233%. And this has always been kind of the cautionary thing that I talk about with Bitcoin, where a lot of people have been looking at a price target of Bitcoin, trying to be conservative of 150K, 200K. Okay, so that's basically a 100% return. Let's call it from 83K, what it is right now. And so that would be great, but you have to understand that if we are in a bear cycle on Bitcoin, if Ryan Cohen does fail, and we do a standard, which I talked about in past live streams, if we do a standard Bitcoin bear cycle all the way down to, let's say, generously 70% from the all-time high. So 70% from the all-time high. That's being generous, by the way. It's never done less than 78, but we're just going to assume that volatility is reduced. And so that's about 30. And this will take a long time. And so that's about a 60% drawdown. So what will we need to make up a 60% drawdown? We need a 150% return. And 150%, that is, that's like 83 times 2.5. So yeah, if your target is 207K over the course of several years, 1 or 2 years, if that's what you're looking at, then you're looking at about a 1-to-1 in terms of risk and reward for what could be the worst case for Bitcoin. So you just have to take that on. You got to ignore all the people telling you moon, and you got to look at the risk reward of what you're doing. And so, yeah. All right. Yeah. So what's my view on real estate? Man, honestly, it's a little more esoteric. I think that Zoomers probably want to buy a house at some point. and they can't right now. And I'm not sure that I'm not saying that they deserve it or that the universe is going to open up and give it to them. But I remember I posted this in Discord the other day. Let me pull this back up. About how, yeah, so is that exactly what you said, D. FHA delinquencies. These, by the way, if you don't know, FHA is Federal Home Assistance. I don't know. I think it stands for, but these are basically government backstopped loans because after 2008, which we talked about, little known fact, people actually, or excuse me, the United States government started backstopping loans. Essentially, you get a loan from a bank or a lending institution, but actually, if you default on that, they don't eat the hit. The federal government does, and then they still package it into securities. So we learn nothing. We don't do anything different. But these are houses that have not flooded the market, and they're really, really high. I think people basically run out of cash that was printed back in 2021. And let me see if I can pull that up. Let's see. U.S. home savings rate or personal savings. Let's see. There's probably let's see, personal savings. It's very low, but I think there's actual number we should see. It's low. People don't have much in savings. People are living paycheck to paycheck again, and they're delinquent on their mortgages. What about car loan delinquencies? March 7th, Americans are behind on car payments at a record level, and so there's a lot of debt that's not getting repaid right now, and so that's not bullish. That's not bullish. So yeah, Americans are hurting, and there's a lot of, again, we talked about the Bitcoin manipulation, the good kind that lifts it up. The housing market in the United States is artificially lifted up by keeping these delinquent properties from getting foreclosed upon and entering the market. And there's a lot of people, when people sell their house, they want to get as much money as they possibly can. And so people are being very stubborn about not dropping the price on their houses. And you're seeing values sort of start to creep down. Let's pull that up. U.S. What is it? I haven't looked at this in a long time. Thanks for bringing this up to me. It's good to keep apprised of it. So this is a U.S. home value. Let's see what we do. Yeah, okay. Prices for homes sold. We'll just look at that first. So yeah, they've started to kind of taper off. They had a high in last quarter of 2022, and as of the end of 2024, they've come down quite a bit, but they're still being held up. And there was, I need to go back and look at it. I'm not going to waste time doing it now, but it would behoove me to go back and look at this. Actually, maybe I saved it. Hold on. I made something in TradingView not long ago. Let me see if I can find it. Sometimes I don't name my stuff. Did I not name? Okay. Basically I looked at inflation and I compared that to home values to kind of create there's a curve in here somewhere. Again, just kind of a model. But basically if you assume that most price charts revert to the mean, clearly what we saw in 2020, this was a little out of the ordinary. In other words, there's a curve, there's a sloping curve that you can sort of, let's just do this. Hang on. There's a curve. There's a line. And that line should probably do some intersecting of the lows like so. And it was a little bit fancier, but we're just going to go with this. And so if you look at that and you understand that, things tend to revert to a mean, or if you're being generous and saying, okay, that's what it's going to be. There's still a good little bit for this thing to come down. Okay. And then houses become, well, depends on who you ask. They become more affordable, but then they also kick into people's net worth a lot. And yeah, it just depends on what stage of the home buying experience that you were in, if it's good or bad for you. And yeah, but I think that what goes up must come down, and vice versa if you're looking at charts. And so yeah, home prices are still too expensive, and they will and need to come down. And like right now, that's being kicked down the road by these FHA loans, not being allowed to foreclose, not letting them hit the market, not letting them create supply, because that would make some people mad. I mean, that's kind of why the government started to backstop it, was to keep people wealthy. But I mean, I'm not going to get into argument about if that's the proper role of government or not. But if things go badly, then it wasn't really a good idea. Yeah, commercial property, that is a whole different bag of worms. I don't know how. I know enough about commercial properties to know that I don't want to invest in it. I'll say that much. My understanding with commercial properties are things don't make sense. Well, they make sense, but they don't make sense. And correct me if I'm wrong, Inspector Crusoe, but basically you have investors that kind of own these commercial properties, and their financing, in other words, the ownership of these, is based upon the expected rent, the expected lease rate. And in order for you to bring that lease rate down to maybe something that people actually want to pay, you would have to go to all these investors and you have to change around the bonds and the ownership. You have to get a lot of approval to actually make that change. And that's so hard that they just leave it vacant and keep asking that high rent, don't get it, and that's just the easiest thing to do. And so you don't see the rent prices coming down to where people can afford to put a business in there, and they just leave it. And then they wait for 5, 10, 15 years to sell the property to somebody else. And that's when they make their money, not on leases, but on the selling of the property. That's my understanding, and it's not the game for me. All right, let me go back. Grayscale BTC covered call ETF and BTC premium income. Yeah, so there's been a lot of these products. What is options strategy ETF? So I know of one is the Tesla options strategy, where they try to Tisley, that's right, where they basically, it's an option income strategy. I mean, you're getting paid a dividend, but I mean, look at what your principal's doing here. I mean, this is basically when you do stuff like, I don't know if you're talking about doing the covered calls yourself, or an ETF that uses covered calls, or BTC premium income. Basically, there's a lot of these products, and basically what you're doing is you're handing your money over to a trader, and they're trading the options for you. They're basically selling options for you. And this has been a horrible investment. This is just the Tesla one. This is going back to 2023. Yeah, nobody's making any money off this. Maybe you're getting like a fixed income, a little bit of it, but the value of it is just going down. So they're doing something wrong. You're basically just paying a trader to do this strategy for you. And I don't see these really ever play out very well. You better off learning the skills and doing it yourself and taking responsibility, and then realizing if it is for you or not. But you're just basically outsourcing it to somebody else to lose money for you. Well, it's not scammy. I mean, scams would imply that it was illegal. They're not very good. Like, I mean, you're paying somebody their salary. They're sitting there working a job, losing money for you, at least in the Tisley. So you're better off just owning the asset outright and not being greedy and not trying to earn yield. Because the last time people tried to earn yield on crypto was Celsius, and you saw how that played out. And they're trying to do that again, by the way. So, yeah, there's so much that's lost to greed. It is. But, you got to have a little bit of it. So, all right. We're kind of coming up to the end. What questions you got for us, guys? I mean, it's all about next week. I mean, what has happened this last week has the doings have transpired. Oh, I got stuff from my buddy. Let's see. Let me make sure I got all the questions too. Oh, TLT. Well, that's the bond ETF, and it's doing exactly what you would think it do. By the way, you don't hear much about this, but this is a big deal. Yields, the 2-year yield, the 5-year yield, the 10-year. The 10-year is big. 10-year yield, which, by the way, this is bond yields. This is basically the interest rate that you get on bonds. Mortgages tend to follow 10-year very closely, 30-year as well, but more 10-year because most mortgages are kind of structured around someone owning their house the average number of years, which is 7.5. That's why it's closer to the 10-year. That's why you have a lot of these adjustable rates that kick in after like 8 years to 10 years. So that's really what rates are based on, mortgages. And so that went down big. It looks like it came back today, but just this week, where's Monday? Monday. Just this week, yeah, all the way from 4.2 down to close at 4. So that's actually a pretty significant movement. It's coming down. So the 10-year yield is already coming down, and so that's also because it's because of the tariffs. It's also because of, you don't hear much about inflation anymore, do you? Remember when we were going to be Zimbabwe? Yeah, inflation's actually very low. I mean, you're seeing deflation, so that's part of it. But inflation is down big, and so that's bringing yields down. And a lot of people have been saying on Twitter, speculating that you're going to see the Fed have to cut rates. Even Donald Trump tweeted today, like, "Oh, the Fed should lower rates." I mean, that's what he wants because that's going to make people feel really good. It's going to get the stocks back up. It's going to get the crypto back up. It's going to get mortgage rates down. But they don't really need to. And I was looking at the odds this morning when that was kind of the buzz. And so they've actually dropped the probability. It's less than 50-50. It's about a 40% chance now that they do drop rates in June. That's the next thing where they think that they're going to drop rates by 25 basis points or whatever. But I'm actually going to take I'm going to take the under on that. I don't think they're going to, because they don't need to. Inflation's down, and it really is just a question if the Fed is going to try to save the stock market. And they did it in COVID. That's the Fed put, but I don't know if they're going to do it now. And so that's the long answer for TLT. Short answer is yes, TLT go up, because TLT is bond values, and as yields go down, it goes up. TLT hasn't been a really great trade. But if you want to be long bonds, because if you think that yields are going to go down, if you think the Fed is going to lower, if you think all that, and you want something that's going to probably be low volatility, then TLT is the ETF to play that. But it's not been a very interesting trade. But yeah, it does bear mentioning that this week yields have dropped a lot. And yeah, so all right, let's see. And this goes back to the question about answer to MM. Is buying leverage a good idea when the markets go down? Yeah, I hope I answered that. Like, I'm a little more risk averse at this point in my career, and that's why I focus more on the downside risk. And leveraged ETFs expose you to more downside risk than upside risk. And coming into trading and investing, you're like, I gotta make money. Once you get the money, then you're like, I'm probably really good to keep that money, because man, I really have taken a lot of losses after a decade of doing this, and that hurts a lot more. And so hopefully with the help of a friend here, we showed why you got to pay more attention to losses, and leveraged ETFs they're just worse on the downside. If you time it right and you're lucky, that's fine, but you can't bet on being lucky. You can't. You have to manage your risk. So only for specific things. Okay, good. Federal Housing Administration. Thank you, Swaggy T. FHA loans do have a first-time buyer program that allows lower down payments, interest, and higher PMI. Commercial is very different, yeah. So your understanding of commercial is true. Triple net leases, yeah. I like I said, I don't do commercial. I thought about it. Like everyone, I think, thought about it back in 2021 when everyone was seeing so much vacancies and thought like, oh wow, what's the most depressed asset? It's going to be commercial real estate. But then when you actually, a buddy of mine that works in commercial real estate to explain it to me, and after he was done explaining it to me, and he said, yeah, I mean, you can do it, but you don't expect a return for 15 years. I was like, okay, yeah, I'm not that patient. So thanks for letting me know. All right. Let's see. Solana. Did you ever pick up NVIDIA bonds? No. And I'm actually short NVIDIA with puts. It's not carrying my whole portfolio, but it was just one thing I felt pretty confident about because coming into this year, everybody wanted to buy NVIDIA. Now I didn't get the top, but I put it in when we broke. NVIDIA started giving me a lot of concerns. Now the bonds are different. I don't know anything about bonds. You'd have to tell me about bonds. I don't do corporate bonds. That's a whole field of specialty that I haven't even looked into. I just trade price and sentiment. And the sentiment coming into this year with NVIDIA, I mean, that's the thing. Bonds will probably be fine. In fact, bonds may actually be. Hold on. Wait a minute. I may be lying to you. Hang on. Because I started to dabble in public.com. Hold on. Oh, I lied to you. I do have NVIDIA bonds. Okay. Just a small amount, though. Just a small amount. Like this. These are... okay, wait. Hold on. I started playing around in public.com because you can actually buy... No, I don't. Sorry. I have Disney, Truist. I have actual AMC bonds. What are we doing? Unrealized return. AMC's done pretty good. But these are corporate bonds that I picked up just to kind of start playing around with this platform. Yeah, so actually, let me not poo-poo it. I have the reason I forgot about this was because I just haven't looked at it for a while because trading has been pretty interesting. But the gist of it is, doesn't matter what the stock price is doing, you can get a return on this corporate debt. And there's nothing wrong with corporate debt. You're just betting that the company won't go out of business or default on their debt. And so I think NVIDIA would be pretty good. And thanks for bringing this up because right now with NVIDIA bonds, you're looking at a yield of about 5 and a quarter. These are, however, callable. And what that means is the bond can be called and then they can refinance their debt, which means that they'll go probably refinance it for a lower rate. But these coupon rates are already at 3.5. And so they're not really going to be able to refinance these much lower. So yeah, the yield is basically, if you buy it now at this price, usually the par value is 100. And the reason you're able to get a yield of 5.18% on a 3.5 coupon is because you're buying it cheaper. In other words, 3.5% off of 76.62 equals out yearly to 5.18. Math. Not gonna. If people are really interested, we can dig into corporate bonds a little bit. But actually, I think I probably looked at NVIDIA bonds and I didn't get them, but I did get the others. Just to play around with some corporate bonds and try to learn a little bit. But as you see from that, I just only put in about 1,000 in each, and yeah, it's. I mean, my portfolio's up $50. So yeah, but it didn't go down. That's important. So these companies are down big, but they held their value. And so yeah, let me not poo-poo corporate bonds just because I'm not big on them. I'm small on them. But yeah, but buying an NVIDIA put made me a lot more money. And that came from basically, it starting to spike out at the highs in the late 2024 and then earlier in this year. And then when we finally broke, We finally broke down. I didn't hit this perfectly, but we broke down on the 28th of January. Grabbed a put, a January 2026 90 put. Sold a put against it to make it cheaper. And, well, we're just going to hold that for the rest of the year and see what happens. NVIDIA, as I say with all tech stocks, you want to be more ambitious with buying your favorite company. And 50%, 50%, 50%. Look, in just a few years ago with NVIDIA, you got from the high to low, 68% markdown. So what would a pullback to 81.97 on NVIDIA be? Only 46%. What would a 60% be? 62% be 60. That's when you get interested. That's when you get interested in your favorite tech stock. Not when everybody's talking about it like, oh, it's the best thing ever. I mean, come on. Like, go through these cycles a couple of times, and you'll see these things don't change. When everybody's screaming and yelling on social media for you to buy something, don't. Wait until they're like, oh, that's crap. Like Dollar General, that company's going out of business. That Dollar General, they're closing stores. Okay. All right. Give me some of that. So, but yeah, but then bonds, they let you basically play the trade. Is this company going to go out of business? Yes or no? And then you get paid more than you can get from treasury bonds or a money market account at this point to hold them. So it's actually it's a pretty decent way to park your money, really. If you want to take on the added risk of the company itself, which is not zero but not high, that they will pay back their bonds. But then also you kind of have to watch them because, like I said, sometimes these bonds are, or oftentimes these bonds are callable. In other words, if they can refinance the debt, they will give you your money back, and then you got to go buy the bond again at a lower coupon payment. But looking at that, as we just did, the NVIDIA coupons are in the 3s. They can't really refinance right now because that's as low as they're going to go. It looks like they already have refinanced. Is that why you're asking the question? But it's actually not a bad idea if you want to hide out. If you think that we're going into recession in equities, then and you want to just hide. Bonds have always been the historic thing that people hide their money in. Hide, not like against taxes, but basically hide out from the risk markets, and you get a little bit more than you would just having cash. So that's the trade there. The stock split effect, is that a question or a statement? Because it's really, you're just giving NVIDIA money. You're giving NVIDIA a loan, and they're paying you interest. And then oftentimes in these bonds, there'll be convertible bonds where rather than paying you cash, they will convert into shares. And then that's actually kind of a fun thing if the share price is up. And so a lot of moving parts there. That's why I'm not really a big expert on it, but I dabbled, as you can see. Richard, what do you think? Richard, I hate to be the bad guy, but I'm looking at Ethereum, and I've been watching it. Like, I posted about it months ago. There was a trade in Ethereum that I took. It was hold on. It was a volume profile level around 36. Where was it? Hold on. Let me see if I can find it real quick on the Discord. Give me a second. So in crypto trading ETHUSD. Let's see. So yeah, so basically the problem that I had with Ethereum was that it should have held its 50% around 3,200 before it entered into a full-on bearish trend. And this goes back to my Ichimoku. Like, this defines the trend. And so back here at 3,200, when it gave this up, that enters a bearish trend, and it's not good. Before that, you had let's see, where's the other one? There was a really good long. I'm looking for it. It was a spike trade, I believe. That was 2022. Hold on. So, yeah, I have to go back through and look at, but the thing I've seen with Ethereum is that the number of new users are not increasing. What is the trend for staking rewards for Ethereum? And I'm confirming with Grok right now, but the staking rewards have been going down. I don't think that Ethereum bottoms correlate with market bottoms. I think it's its own thing. I mean, crypto has only been around for only so long, and I don't think you can really. Bitcoin definitely correlates with the stock market because it's got a lot of institutional playing in it. But let's see. You can't. You have to manage your risk. So I accidentally hit only for volume there. From a pure price action perspective, and also looking at the market, your other smart contract chains like Solana, which I'm going to talk about here in a second, and Cardano are basically eating the market share of Ethereum. I mean, you got to ask yourself, what does Ethereum do better? I mean, look at it from a competition standpoint. Like, what is it faster than Solana? No. Is it cheaper than Solana? No. And you've seen all the scams, all the meme coins for the last several months. Haktua, Trump coin, they're all on Solana. They're not on Ethereum. And so from a business standpoint, if you're running a business, if you're choosing a software platform to build upon, people are making the choice to use something that is faster and cheaper. And Ethereum is losing market share. So what does Ethereum have that these other things don't have? Well, a lot of people that want it to go up, that's for sure. It has arguably more decentralization than Solana, but when people are making a decision on what to use, I don't think they really care. I mean, the thing that kind of turned me off to Solana, honestly, was how much insider ownership there is, which is it's very high actually. But it is being used for this use case of smart contracts, and it's holding up a lot better than Ethereum right now. And the main reason I'm not interested in Solana right now is because of that institutional holding, and it's up pretty big today. Yeah, I just don't want to be the bad guy, man. But I know there's a lot of people. I got a lot of friends that have a lot in Ethereum. Okay, yeah. So here's some FUD for you. Ethereum developers are leaving upset. I mean, here's the thing. Part of me is like, okay, that's FUD. That's a bottom. You should buy it. But it really comes down to the use case, and it comes down to the competition. And I don't know if you're old enough to. I don't know how old you are, but there used to be this thing called MySpace. Okay, it was a technology platform that everyone was on, and then suddenly they weren't, and then now nobody's on it. Before that, there was GeoCities. That's where you could make your own little website when you actually had to get a notepad and make it before you could just upload your photos and do your thing. And now nobody's on it. And so if you look at the history of tech platforms and look at what's analogous to that, is you need to be where the people are, and if the people aren't, then that platform is dead. And all the technical analysis and all the hopium isn't going to solve it, just because now you have a price that you can associate with it. You got to look at what's happening in the market, and it's just, you got to look at it as a platform. And so Ethereum as a platform is just not being used as much. I hate to be the bad guy, but that's just the way it is. And so, I mean, take that for what you will. I mean, I'm trying to help you out here, but I wish I could tell you, no, it's going to be fine, but you got to tell me, how's it going to be fine? And if you're just saying, well, because technicals, people got to buy it. I mean, it's people got to buy this thing, and they got to have a reason to buy it. There's a reason to buy Bitcoin. Number go up, limited supply. Solana, so that you can scam people. I'm not saying it's a good reason, but that's what people use it for. And I don't think NFTs, and I think you can do NFTs on Solana now. What are Pudgy Penguins on? Pudgy Penguins. I got a friend of mine that is big into Pudgy Penguins. He's real bullish on Pudgy Penguins. I should just trust him. And okay, so it is okay. Well, the Pudgy Penguins NFT collection was originally on Ethereum, but the Pingu token, the native token, is on Solana. Also, Abstract Chain. I'm not sure what that is. Oh, it's a Ethereum Layer 2 chain. Okay. NFTs are probably on Ethereum, but the Pingu token is launched on Solana. So it's half and half. But I would say if you're looking at Ethereum from the I like the smart contract use case, then you may want to consider some diversification in Solana. And you consider them basically the same trade, but you're going to say, okay, I want to be in the one of these that wins this race. And again, that goes down to, you need to pay attention to like what the developers are doing in each of these. And that's not going to be my specialty, but that's just my assessment of it. It could be the Nokia of crypto. I don't know. We'll see. Oh, thank you. Okay. So, yeah, thank you. I must have hit my mute button when I was moving my mouth. I'm going to change this setup around. I'll show you guys at the end here what I did. Actually, I kind of recommend this. I do recommend these monitors, by the way. They're really cool. But just talking about oil. Oil is the big support here. Again, 50%. I'm marking it from the low here, which was 0. Remember when oil was free or below free? People were paying you to take it. So that's about 65 on oil futures, and we broke it today. And that is actually a recessionary data point, because oil is both speculative, because people are assuming they're going to need less oil because the economy is going to slow down, but it's also kind of forward-looking as well. And so that is our recessionary data point. That's one. But it could just be a spike below. We'll see. We're getting into a very interesting time. Normally, these interesting things happen in the first part of the year. Things tend to get boring in the summer. So this next month, and probably going into May, as they say, sell in May and go away. This next month is going to be the month to pay attention to everything that's going on. Let's do a quick recap of sector rotation and see if everything. Well, it'd be probably better to see it next week when things kind of level off, once people make their choices. Let's see, sectors. And so for the last 10 days, I'll say the last 5 days, what did this week show us in sectors? So energy, yeah. You remember how energy was leading last week when we looked at it? Yeah, it was, wasn't it? Jeez, hang on. Yeah, so they were doing pretty good last week, up until last week. But what do we see? Staples, healthcare, utilities, quality this week. And what does that tell us? Staples, healthcare, utility. It's exactly where we would expect to be. Orange line being the market turning over. Sector rotation. Same thing has been for the last 2 months since the beginning of the year. That's why all the stuff that's solid is doing well. That's why your SPHD, which is your that can't be right. Well, I guess maybe it closes in. Does it tell us a weekly? Yeah. So yeah, I mean it's playing out, and then one of these days, you'll see financials and real estate begin to lead. One of these days, and that will start to end the. What is a recessionary? What others are recessionary? That there are lots of things people say were recessionary data point, but I just know that the reason you have oil as a recessionary data point is because people assume that as an economy contracts, it uses less energy. Think about like a living organism. The living organism doesn't move around as much, consumes less calories, just like our economic organism consumes less energy. And so oil prices go down. And likewise, when the economy is running hot, energy prices are very high. Top of the market, energy prices are very high. So yeah, that's just it's kind of a data point for we're going into a recession. Energy prices tanking. It's oil tanking. So make that for what it will. All right. And oh yeah, my favorite safe haven currency. It's not winning. It's not losing. Monero holds out. This is one of the things that made me really kind of notice the Bitcoin manipulation, because there were several points where Bitcoin was up, and it was just XMR BTC is really kind of a good indicator of what kind of phase of the crypto market we're in. Believe it or not, I've started to see it as a safe haven asset because it holds its value while everything else is going down, and of course it loses the crosspair loses when Bitcoin goes up and outperforms it, but still holding out. So yeah. Oh, and as I promised, give you guys this quick thing right here. Let's see. So yeah. Not saying you need to spend. But yeah, 2 widescreen monitors. That's what I'm trying to play with now, along with my that one over there. But yeah, that's why I'm in a weird position today. But I'm gonna fix that so I can see you guys a little bit better. So anyway, thanks for hanging out. I'll be back next week because we have to. And trade wisely, guys, and manage your risk. We'll see you then.